Welcome to Innovating with Scott Amyx. This is your host, Scott, and today I'm joined by Hiroki Takeuchi, CEO of GoCardless. Welcome, Hiroki.
Thank you for having me.
All right, so my understanding is that I guess you were in some pretty serious accident several years back that actually left you paralyzed from the chest down. Tell us about that experience and why that is kind of affected your management style at GoCardless.
Sure. Yeah. So just over 3 years ago, I had a cycling accident in London. It was a pretty serious one. I kind of went into the back of a car and ended up fracturing my vertebrae, the T8 vertebrae, which went into my spinal cord and has left me paralyzed from just below the chest down. So as you can imagine, an injury like that is quite life-changing. I ended up spending about 3 months in hospital, basically relearning how to live, right? Everything from how you can kind of move from the bed to the chair to how you can open a door or everything in between. You kind of need to readapt, and you're almost like learning about how the world works again from scratch. So it was quite an intense period, but obviously that meant that I was kind of out of the business for a while, right? It was kind of a fairly sudden event. No one plans for something like this, and so I was out of the business for those 3 months, and then when I came back to the business. I was really fortunate that I had a super supportive board, super supportive investors, and a super supportive team that had looked after things and made sure that we continue to operate in my absence. And then when I went back, obviously I was still kind of going through rehabilitation quite intensively. So I had to go back gradually, starting 1 day a week, and gradually moving up from there. Back to kind of a sort of a full-time role. But as you can imagine, a change like that means that you kind of necessarily have to revisit how you lead and how you manage and how you build a business. And it's a strange one, really, because in obviously overall it was a very negative experience for me, a personal level. But in a professional sense, it was kind of a weird opportunity because I was forced to kind of relinquish everything that I was doing and then came back in a gradual way. It gave me this opportunity to really rethink how I was managing, how I was leading, how I was doing my job, and what parts of my job I was really having the most impact with, and what parts of my job where I like still kind of micromanaging or holding on to things that weren't necessarily the best things to focus on. So it definitely had a fairly big impact on the way that I run the company, and I think I'm a better leader now than I was before. So it's an interesting experience.
There is a little kind of metaphorical analogy, which is the notion of learning to delegate is also kind of central to this philosophy that I sense from reading some of your materials around core versus context. And I think we'll talk about it a little bit more in detail around the importance of TransferWise. Most startups will rarely actually integrate with a partner in such a way that their business model is so heavily dependent upon it. But yet I think it's kind of analogous to what they're talking about, is this notion of making sure you do what you do best that cannot be replicated, but everything else you try to find other opportunities for partnerships and delegation. So let's get into the GoCardless. My understanding is that enables businesses and their customers to easily set up recurring direct payments between bank accounts via direct debits. And that's an important piece of it, I think, that we'll try to elaborate a little bit further. But tell us first about the genesis of the startup.
Yeah, sure. So, I guess, we're on this mission to take the pain out of getting paid. And really, the reason we were focused on that is because we were struck in the early days by how difficult it is to get access to and run all of these kind of payment operations. And in particular, what we were struck by was that, there was a lot of technology being built on top of the credit card networks to make it very easy to, build e-commerce businesses, right? But there's this whole other world of business models out there in particular around these kind of recurring business models like subscriptions, SaaS, those kind of models where more and more of the world is going to these kind of usage-based models. And the way to collect payments in those situations, the challenges you face are very different. And we didn't really see anyone trying to address this. And so, what we thought was, okay, well, look, like if you were going to design something focused entirely on these kind of business models, what would it look like, right? And the conclusion we came to was that you have these methods of payment that have existed all around the world for many decades, right? You have ACH in the US, you have direct debit in the UK, you have this system called SEPA that works across Europe now, and kind of every region has its own version. And these are the way that like the large domestic utility type companies have been collecting payments forever, right? So even though, say, for example, in the US, people aren't necessarily as familiar with ACH as they are with credit cards. Actually, most people will be paying their gas bill, their cell phone bill using ACH, right? And the reason is fairly simple. Is because from AT&T's perspective, this is by far and away the best way to collect payments. But the big question we were asking ourselves was, well, look, if that's the case, why is it that your local gym doesn't collect payment this way? Why is it that Netflix doesn't collect payment this way? Why is it that all of these other businesses with similar models where they have this ongoing relationship with their customer isn't using these kind of payment methods? And that's really the problem that we're out to solve. So what we do is we build technology on top of these bank debit systems that exist all around the world that does a few things, right? The first is that it opens up access to make it much easier to get access to these systems in the first place. And especially for some of our smaller customers, this is a really big deal, right? Like a lot of banks will kind of guard access to these systems just because they don't know how to manage the compliance of offering this to a smaller customer base. And so, they've never been able to access it before. And the second problem that we solve is that, these are old legacy systems, right? These are systems that were designed back in the day when pieces of paper were still being shipped around the banking system. And as a result, they don't work that well with more of a modern cloud-based operating model. And we've built technology that makes it really easy to operate these systems and make them seamless to use with your cloud software. And then the third problem that we solve is that obviously because each country has its own banking system, this isn't one system around the world. It's a set of fairly disparate, fragmented systems. And what we do is we build technology to bring those together into a single network. And so, a big part of the reason why we partnered with TransferWise, and it's a really good question about, how we thought about that, is, FX is obviously a really important part of any kind of payments network. If you want to be able to collect payment from a customer in Australia and then get it paid out into your bank account in the US, directly from one bank account to another, then FX is an important part of that. And, we believe that that's not our core competency, right? There's companies out there like TransferWise that have done a fantastic job of making in a really great FX experience and making it really competitive. And we don't want to try and replicate that. We want to be focused on how do we add the value to our customers. And so I think it always comes back to like, well, what's the best way to create the best experience for your customers? And if you think about it like that, then it leads you down different paths.
So I want to delve a little bit deeper into the 3 points that you mentioned, the challenges, the fact that basically deploying or enabling ACH to be available to smaller, more of a SaaS model for banks was problematic. The second around, the whole user experience, the life cycle aspects of it. And then the fact that you're dealing with jurisdiction issues, domicile issues, and legislative issues based on where you are. So go a little bit deeper into each of those categories, and how did you solve some of those, and how do you vet those issues out properly?
Yeah, absolutely. I mean, so the first two are kind of quite intrinsically linked, right? So the reason why we're able to open up access is really the same reason why we're a better solution for someone trying to build this in a cloud-based operating model. And what's very different about what we built was that before we started, that no one had built internet technology for these systems. And because that's where we started, we were able to do a couple of things. Like one was, we didn't have all of the legacy to deal with, right? We were starting from scratch. And so we could build really great APIs built on really the shoulders of the technology that have been built before us, right? There's so much open source software that exists now that you can use and leverage to build great APIs and great services, in a much faster way, right? And in a much more agile way. So we were able to build that technology, but also by building this technology focused entirely on the cloud, we were able to do something that was fundamental to opening the access up to this, right? So one of the big reasons why the banks don't open up access to this more broadly is because, as you can imagine, if you give someone access to something like ACH, you're giving them the ability to pull money out of people's bank accounts all around the country, right? That's obviously comes with a big burden around compliance and rules and regulations of how do you operate the system? How do you make sure that the customer has the right notifications before you take money out of their account? How do you make sure that when they're signing up to this, they actually know what they're signing up for? All of these kind of things, right? So there's all these rules. And, in the past, all of these rules were very manually enforced, right? It was like, okay, show me your paper form. Does this paper form look like the rules stated paper form? Show me the notifications that you're sending your customers. Okay, do these notifications, are they sent on time? Do they receive them? Are they in the format that makes sense? All of these kind of like very, very tangible and tactical problems, right? The way we were able to solve this by going online was that we were hosting the entire experience for our customers, right? So, we were hosting the checkout, we were hosting all of the notifications and sending them on behalf of our customers. And so we were basically operating the system for you. And what that meant was we knew that it was being operated in a compliant way because we built it for the same, for it to work in the same way for every customer that worked with us. And so, by doing that, we were able to open up access to a much wider audience, and this was kind of quite fundamental. So those two kind of first kind of things that we do are really like linked to being built as a technology company and starting at a time after the cloud had been invented, I guess. And then the third problem is a much bigger problem, right? Which is how do you go and get access to these banking systems around the world? How do you get the right regulation? And this is something that we've kind of had to hone that muscle and build it over time, right? There's a playbook that we now have for opening up access to new markets. And one of the things that's been really great is that because we started in the UK has quite a forward-thinking regulator for financial services. They've actually been quite instrumental in enabling us to get started in the first place. But now that we have a certain level of scale and a track record of operating this kind of a business model, that helped us a lot when we started going into new markets. Because when you go to the Australian regulator or the regulators in the US, you can point to the model that you're operating and show the traction, right? You can show that we've processed billions of transactions for many millions of customers, and there's a level of proof that you can lean on that helps you to get credibility in those new markets where maybe the regulation might be a bit more challenging or where maybe the banks are a bit more conservative. So it's definitely a big challenge, but we've been able to leverage that kind of point of entry in the UK, and that's helped us to kind of build the coverage around the world.
Yeah, I mean, for those that are not familiar with your industry, it's highly complex, and I think one of the things that startups in fintech have had to learn the hard way is that it's not just product centric. It has to be regulatory and compliance and security centric first in some ways, because no matter how good the feature set is, if you're not compliant, you're going to get shut down. So doing it right, having that playbook that can be replicated, it can be pointed back as a track record, I think it's an important framework for fintechs to think about.
Oh, absolutely. And I mean, I think that the key thing though is that these kind of, they set the bar, right? So the regulatory requirements, the compliance requirements, all of these kind of security requirements, these are things that there's a hygiene level that you need, right? And that level keeps on going up as you get bigger and you become more susceptible to kind of the challenges of regulators or security incidents and things like that. So there's this bar that is a lot higher in fintech, I think. And I think one of the challenges is how do you meet that bar but still try and stay product focused. And at the end of the day, the thing is that your customers expect this, right? They expect it to be compliant. They expect it to be secure. And if you don't do those things, then obviously you're never going to work. But that's not the reason they buy. The reason they buy is because you add value, because you've created a solution that really helps them solve their problems. And so you have to get that balance right between, making sure that you're always meeting that bar on the hygiene requirements, but always focused on, how do you add value to the customers, and how do you make their lives better?
Yeah, I mean, for me, I look at it as not just hygiene requirement, but as a defensible strategy. The fact that there are these hurdles means that other similar startups that want to replicate your success are going to have to go through that. And some of that is actually not just working with the regulators, but there's a certain time factor that needs to be worked through as well.
Yeah, absolutely.
The other dimension that we didn't quite talk about, but I think it's a unique advantage that you guys have, is the low cost aspect of direct debits. So if you could just kind of help the audience better understand, why is this lower cost relative to, let's say, using Visa or credit cards for that SaaS?
Yeah, I mean, I think there's really, like, if you were going to say that, in a nutshell, what are the sort of the two biggest benefits about what we offer, and why they're so uniquely placed to be the best way to collect recurring payments? It's that low cost, and then it's also the reliability, right? One of the and they stem from the same fundamental reason, right? Which is that because you're taking money directly from someone's bank account, you don't have all of the layers in between the transaction, right? So when you look at a credit card transaction, there's actually 4, 5, maybe even 6 different parties sitting in between each transaction, and all of them want their cut, right? They need to take a small amount of commission to operate the system and participate in the model. So you have your acquirers, your gateways, your processors, you have the issuing banks, the acquiring banks, you have the networks themselves. And so that's a fairly structural problem, and that's what adds a lot of the cost to the system, because you have all of these parties. But then also it kind of goes to the reliability point as well, right? Well, one of the big challenges with cards is that because you're taking money via something that's linked to a piece of plastic card, you can lose that card, your card expires, and so there's an inbuilt amount of failure in the system, on not necessarily on a one-off transaction where you're using the card and it's in your hand, but on those recurring transactions. So say you go and you sign up for Netflix, and then your card's there stored on file there, and then 6 months later you lose your card. Then they obviously have to update those card details, and that creates a lot of the failures that these kind of recurring business models see. So we see the kind of pulling directly from the bank account as a fairly fundamental reason why there's a big benefit to collecting payment this way for recurring business models.
Well, I think as you guys only grow and capture market share, it's clear that the disintermediation strategy is going to be working. So do you foresee that First Data and some of the other typical intermediaries or payment transaction companies are going to look to you as a foe or potential acquisition target?
I mean, time will tell, I guess. I think it's an area where probably there's not been as much attention, right? If you look at payments as an overall landscape, much more of the focus has been on e-commerce and retail, and the way that e-commerce and retail are starting to merge into these kind of omni-channel models, and so there's a huge amount of competition in those spaces, and that this kind of these recurring business models, I don't think they necessarily get the attention they deserve, and especially as we see more and more of the economy move this way, I think it's going to become increasingly important. So, there's definitely some interesting movements in the market. You're seeing the Visas and the MasterCards take these kind of non-card payment methods a lot more seriously, right? We've seen that with, Visa's recent acquisition of Plaid, with Vocalink that MasterCard acquired a year or two ago. And so, I think that there's an increasing realization, and people are waking up to this idea that there's different ways to collect payment, and maybe the card model, which has worked so well in the retail space, isn't necessarily going to be the right model for every kind of business model, especially as we move to the cloud and to more and more of what we consume being on the internet. And so who knows what will happen in terms of whether they'll see us as foes or acquisition targets, but we're very much focused on helping our customers to take that pain out of getting paid, and they seem to really love us for it. So we think that we're onto a good area of the market, and we're going to just focus on scaling that and helping as many customers as we can.
Terrific. Well, it's definitely a volume business, and it's a very attractive business from my perspective. I think whenever you're in between a buyer and a seller, and you're basically the platform by which the transactions occur, that is the right pipeline or model to be based on. We're out of time, so my last question for you is: what was your greatest product innovation failure, and the lessons learned?
It's a good question. I think that probably for me, the biggest learning that I had in the earlier years of the company is that it's very easy to think about product innovations purely from the perspective of what you build, right? How do you build a great product? But I think that the thing that I probably underestimated is the importance of the distribution, right, of that product, and the servicing of that product, and the value that you can create for your customers is really the sum of all of those parts, right? It's no good having a fantastic product that's super innovative if no one finds out about it or no one buys it, and then once they buy it, if they're not supported to be really successful with it. And I think that probably the thing that we struggled with the most in the early days, and where we've had to kind of rethink our approach the most, has been on that sort of topic of not focusing just on the product innovation, but all of the other parts around the product that make that product successful and turn your product into a service and a solution for your customers. So I think it's less of an individual product innovation that's gone wrong for us, and more of a holistic kind of question of how do you think about getting that product to be successful for your customers.
Terrific. So on that note, I've been joined by Hiroki Takeuchi, who is the CEO of GoCardless. Thanks for joining.
Thank you for having me.